Good morning, everyone. How are we doing today? This is your daily financial news for March 10th. We're going to talk about the jobs market. We're going to talk about the housing market. We're going to talk about Jerome Powell. We will even paint the picture of what is coming next week. But wow, we got a lot of people doing the work that we will also send some congratulations out to. Folks, let's first talk about the housing market and why I am a little nervous about what I see potentially unraveling right before our eyes. As you know, if we go back and just watch the last 2.5 months, what happened? In the middle of December, rates started falling. And as all of the great mortgage brokers and real estate agents that you and I speak to each week, they were all telling us about bidding wars. We were talking about buyers rushing to the market. We were talking about, frankly, unhealthy activities. Then we saw rates rise and they exceeded 7%. At that point, some of the crazy demand backed off. We learned from the consumer that 7 is bad, 6 is good. I had started to hope that we would see 7% all year. The housing market is broken. We have limited supply. We have a move-up buyer who doesn't make financial sense to move. And I believe we need time and we need years to get back to a healthy housing market. I had hoped that the 7% mortgage rate would hold at least through the spring selling season. Alas, it has not. As of Friday, it appears that the mortgage rate now, this again is 30-year fixed, best credit, 20% down, owner occupied. The average is 6.85. Not only below 7, but now below 6.9. What does this mean? Well, that means you could very easily get something perhaps below 6. Certainly 6.25, certainly 6%. Maybe you have to pay points. Maybe you get the seller to pay them. Who knows? But we are quickly getting to a rate that we learned just 6 weeks ago, 8 weeks ago, was market moving. In fact, the lowest rate that I remember us seeing together was about 6.75, 6.8. That was early January. Well, folks, as you'll see in a moment, we have an inflation reading, actually 2 inflation readings next week, plus retail sales. There's a chance, if those numbers come in soft, below expectations, that we could see a noticeable move down in rates. Now, in fairness, it is also possible that these come in hot and rates shoot back up to 7. That is where we are. The fun starts on Tuesday. But again, I have been studying the consumer for a long time. Consumers, in my opinion, are great at holding back or being afraid or throwing in the towel for quarters, maybe a year. But history of study of the consumer says that at some point consumers give up and they say, damn it, it doesn't matter. I'm buying something. I'm done waiting. I don't care what happens. And folks, that is horrible behavior. That behavior of buying just to buy, to stop being frustrated, that can lead to a bubble. If we have unhealthy housing market where consumers are just coming in saying, damn their torpedoes, and that continues for a year and a half because they're just pissed off and frustrated, we could be heading into something. And that's why I had hoped 7% would hold, but alas, it has not. Powell in front of Congress the other day went as far as to say that there will be bank failures, first because of commercial real estate, and on the residential housing, he says, where is it? On the housing market, as mortgage rates normalize, we still do not have enough housing. Folks, the housing market is broken. We don't have them. If you look at what Logan puts out at Housing Wire, During the peak, we had something like 300,000 homes coming to market, and now we're at 53,000. We're not getting the new listings. We were seeing active listing build ever so slightly, but that's when rates were above 7. We are now below 6.9. I fear that we will see active listings actually fall in the coming weeks. So again, we have to watch housing. So first and foremost, if you guys watched our weekly wrap up with Ty, I tried to show this design. Let me show it now. This is a hoodie that I'm having designed, kind of on the theme of, greenhouses, red hotels for one rental at a time. It's going to be a limited edition hoodie. We're only going to create 99 of them. They are going to be numbered. But yeah, I had someone draw this, and I look forward to having this created, and shout out Sierra for helping me do that. We should hopefully have those shortly. So again, sorry I didn't show last Friday. I apologize. I was actually wearing it, so I didn't know how to position it on camera. But you can look forward to those coming shortly. Let's go into next week. We're going to talk about next week earnings first, and then the all-important economic calendar. So earnings that we will be watching next week start on Monday with Oracle, kind of a bellwether software company. We're going to go Tuesday to Kohl's. What is going on with retail? We're going to get Dollar Tree and Lennar on Wednesday. I think Wednesday is the important day for me because, again, Lennar, kind of that middle market. Lennar is also looking to build smaller homes in different communities. It'll be interesting if they talk about that on the conference call. Dollar Tree is interesting. Are we seeing more and more folks trade down to the Dollar Tree? Are folks that go to the Dollar Tree trading down to something else? And then on Thursday, we get Adobe and Dollar General, right? We get to see both Dollar Store, Dollar General, what is going on with their consumers. All right, let's get to the economic calendar. This is where the fireworks are and will be next week, and they start on Tuesday. Tuesday, we will get CPI. We will get the inflation reading before the Fed meeting next week. CPI is expected, headline is expected to be 3.1. Last month was 3.1. Core continues to fall. Core is expected to come in at 3.7. The last was at 3.9. I will be looking at housing, owner's equivalent rent. What is going on with shelter? We saw last month that 60% of inflation was tied to shelter. Is that rolling over? Are we seeing other parts of inflation pick up? These are important things to watch. On Wednesday, we will get mortgage applications. Again, mortgage applications last week spiked 12%. Will we see that again or something similar this week as rates continue to fall? Thursday, we will get the second inflation reading, PPI, Producer Price Index. We will also get the all-important retail sales. Retail sales, if you remember, in January, disappointed in a huge way. As I recall, they were expected to be up 0.1, and they came in negative 0.8. Expectations for this month, or for February, is a huge turnaround. Expectations for retail sales at the headline are expected to be up 0.7. That is a 1.5% move from negative 0.8 to positive 0.7. So quite a move, and will be a sign that the death of the consumer has once again been greatly exaggerated. And then on Friday, we will get consumer sentiment. What is going on with the consumer? Is there a continuation of them being afraid of inflation? Is it jobs? What is concerning to the consumers? We should also talk about the tech or AI sell-off on Friday. To me, I don't know what this is. Is this the rationalization of AI? Is it a broadening out of the stock market? I don't know, but I plan to ask the one and only Dan Bird later today. Let's talk about Friday jobs. The Friday jobs number is not what it seems. If you simply read the headline, which the headline said 275,000, it was a beat, and it was really a significant beat. If You only look at the headline. Again, the headline was 275 on an expectation of 198, a significant beat. But folks, that 275 was a garbage number. Garbage. Just garbage. What we saw behind that 275 was significant reductions in previous quarters, taking what appeared to be the 275 and making it a junk number sub 100. I consider Friday's jobs number to be a miss. A miss. On top of that, we saw that job creation was heavily skewed towards part-time, not full-time. Folks, look behind the number. The number, again, 275, headline, just read the press clippings, was good. Wow, I would say great. But the number, when you look at it with just a little bit of deep dive, you don't even have to scratch the surface that much. It was a horrible and weak number. The jobs market is not as strong. How do you know? Look at what happened to the unemployment rate. The unemployment rate went up to 3.9 from 3.7. Now, some of that could have been because participation. Perhaps we saw a turnaround in the participation rate, meaning more and more people are coming off the sideline and looking for a job. Alas, that did not happen. Again, further validation that the jobs number on Friday was trash. But if we were going to look behind the scenes and figure out where the jobs are, I think that is always interesting. Jobs really did focus on healthcare, government, and restaurants, where they were weak or negative in construction, transportation, and retail. Last thing to talk about the jobs number was wages. Wages were up 0.1 or 4.3%. Again, folks, we are seeing real wage growth. Inflation is 3%. Wage growth is 4.3. If you subtract 3 from 4.3, you have real wage growth. I believe, as I've said many times, probably for over a year, the way to fix housing is time. We need rates to come in, sure, but we need wages to go up, and it will take time. Remember, folks, look at the spreadsheet. It took over a decade to heal the market last time we were this unaffordable. Yes, today's affordability sucks. Yes, it is also not the worst ever. So if you want to look for resolution or what might happen this time, I suggest you look at what happened last time. And I've tried to do that for you repeatedly on this channel. Alrighty, folks, it is time to send some congratulations out. First, let's call out the one and only and great Millennial Mike. Millennial Mike has been busy, taking over Gary, Indiana, and Mike is getting 6 cards. Yes, some of these are for deals he did last year that he forgot to tell me, but he is rocking and rolling. And Mike, congratulations. Let's also shout out Senya. Senya with 2 for the win. And then finally, Curtis, congratulations for getting your next deal, folks. What are these black cards? These are black cards that I send out anytime one of my followers gets a deal and they say that I helped them in any way. We also have gold cards for your first deal. Folks, lastly, I want to call attention to a video that came out yesterday called Economics 101, How to Get Rich in 2024. This is a presentation I did for Bo Eckstein in the Small Business Summit, where I talk about a few economic topics. We talk about what is going on in the market today, and we talk about just the difference between macro and micro. Do me a favor, give that video a watch. It is intended to be educational and really focus on helping you see the bigger picture. Folks, I want you to have an amazing day. Congratulations to everybody who got a deal. I would love your feedback. Let me get this one more time. What do you think of this? I think this is cool. This is somebody's drawing of me, cartoon character, kind of what we've been doing at one rental at a time. Greenhouses in the red hotels. So let me know what you think of that. I think it's cool, but maybe it's just ego, whatnot. And then lastly, folks, to all the haters out there, I did do my taxes yesterday, and at first cut, I still made some money. I still owe taxes. Yep. So still bankable, still can get loans, even though I don't work. Oh well. It's okay to pay taxes when you make a profit. Take care, everyone. Later.